This is Andrew Stotz of Stotz Investment Research. Today I'm going to talk to you about risk-adjusted return. Now, I ask a question. Would you like to have invested in this stock, 519, listed in Shanghai? If you invested 100 in this stock in January 2014, you would have had more than 400 by now. Or would you have liked to invest it in this stock, 800, also listed in Shanghai? If you invested 100 in this stock in January 2014, you have had more than 400 by now as well. We can put these stocks side by side, and I can ask you the question, which stock would you prefer to have held? Both of these stocks returned about the same, which was more than 400% in the past 3.5 years. They took different paths, but they ended up in the same place. They both yielded the same price return. So how do we compare these? How could we come up with one number to compare it? The number we call is risk-adjusted return, where we take the return and divide it by the volatility, or how much the line is going up and down, dividing by what we also call standard deviation. Now, if we calculate these, we can see there's a massive difference in the risk-adjusted return, 1.7 versus 1. Now, you get 1.7 on the first one, meaning that you get 1.7 in return per each unit of 1 in risk, while 800 gets you 1 unit of return for every 1 unit of risk. With risk-adjusted return, we prefer a high return and a low risk, meaning a higher number. So this allows us to compare these two, and in that case, most people would pick 1.7, 519. Basically, what we can say is that we would prefer a smoother ride, right? If you would have either of these stocks, you shouldn't be indifferent. You'd prefer a smoother ride rather than a lot of volatility. In reality, though, we're emotional. We want to buy and sell and take advantage of the ups and downs that's happening in the stock market. Now, while volatility might matter less in the long run, a smoother ride is usually preferred over time. So this gives you an idea of the concept of risk-adjusted return. I hope that helps you to improve your stock picking.